Welcome to Jade Capital Partners end of week webinar. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, and thank you for joining me. My name's Rob Clayton. To open today's webinar, I'd like to talk about the US dollar index first. As you can see that we've clearly broken out of this trend and pushed on now to record a 9-month high. With the fact that 98.5 is the first point of objective that I've been holding, the view is that we could go another 100 points and look towards 99.5, with any pullback now finding support around 97.5, where all these candles are pretty much supported here, and this peak, and also back here as well. So what does this mean for the other currencies? Well, the Australian dollar, after challenging that 77 region, fails once again and posts its fourth outside range day within the last 4 weeks. You can see that we had one in September, the beginning of September, then we had another one posted in the middle of September, and then another one just before October, and now a huge candle day yesterday, taking out 2 days price action, and now looks towards the support at 75.70. From the rejection of 77, I still feel that any advances towards this region would again fail, with the overall view of a break of 75.70 and look lower towards an objective of 75.0515 and then towards 74 cents and reassess from there. My call in euro has been towards 109.50. Well, we got there last night after an erratic price action in Europe, after stabbing a high of 110.38 and then collapsing and breaking the 109.50 support. If the dollar index holds its stance for another 100 points, this in turn merits for a fall towards 107.40.70 as a next objective. Any advances now looks towards resistance around 109.70.75, with firmer resistance of last week's cap around 110.60. My view on dollar yen has been bullish while we maintained above 102.70.80. Well, this level's held and now looks for a further challenge towards the upside, with the resistance coming in now at 104.30. In light of the current trend breaking, and as long as we holding above this next support at 102.70.80, I still feel that we can push through this level of 30 and then progress further from 104.30 up towards 105.10, and with an objective holding towards 105.85.90 and reassess from there. In light of the current structure of this price action, it should still hold in this upward, this forward pattern, should I say, and I'm looking for this move eventually claim the top side. However, sub 102.70 negates the objective of 105 to 106 and instead puts a renewed bearish phase to 101.05.30. But I feel that this level 102.70.80 will hold out, and if the dollar index continues its bullish sentiment, then I expect to see that target reached. The call on sterling was pretty much bearish now that 122.50 was taken out overnight. Although I did start off with a slightly cautious view that the fact that we could see a move up towards the highs of 123, which didn't eventuate. With a break overnight of 122.50, I look for further weakness into next week, and I feel that the market looks for a potential challenge of 120.20 and then lower down towards 118 to 118.5, which is where we saw that flash crash. Any advances towards the top side, as I say, market should be capped now around 123.75.95. After a few days of consolidation for gold, the market finally broke that resistance of 1268. However, what is concerning is the fact that although the daily technicals are slightly on the bullish bias, I feel that the market is now failing. If you look at the 4 hours, you can see here that it's clearly breaking down. And if we get a move sub 1260, then further weakness should come through and take out these lows, which is around 1240, and look towards the region of 1228 and maybe lower down towards these lows seen in May and also early February this year, around 1200. Reassess from there. In the unlikelihood of advance, well, 76 to 82 may be seen as a challenge, as a potential challenge, but overall I still feel the market is poised to go lower as this 4-hour pattern is actually clearly breaking down. Oil still holding from a cap of 52.20 after twice now retreating from that region. We still need to see a break of 49.40 to get that move lower to a $46 a barrel objective. So a break of 49.40 would expose further weakness, and you can see from the indicators on a 4-hour and also on a daily, we are coming to the conclusion from these patterns that the market will be continue to be forced on that support of 49.40. And if it's broken, of course, I'll be looking for it lower. The ASX 200 still looking towards that support of 53.70.80, and I still expect to see further weakness coming through towards an objective down to around 52.70.80. In light of the current 2 days of weakness, if we zoom in there a little, you can see that overall this support is a major support, and if we do see a break of 53.70.75 or 70.80, then I have to say 100 points off, with the resistance still seen around 54.70. And to wrap up with S&P, still looks like the market can challenge the downside in the next 24 hours, but we need to see a break now under 26 to get that move down towards that 2097 to 2107 region and reassess from there, as we could even be looking lower down towards 2070 as an objective. Fresh advances now should find a cap around 2150. As you can see, the failed challenges this week clearly retreats from that area. Well, that concludes my end of week webinar. Thank you very much for joining me. I hope you enjoy the rest of the day and the weekend ahead.